Hello viewers, in this video I'll be going over the Dow Jones ETF ticker symbol DIA. Today the Dow Jones is up about 22 basis points and I do believe we may head higher. But first let's look at the 1 hour chart. On the 1 hour chart we found some support on the 50 moving average, and on the 4 hour chart we have not reached an overbought RSI, so there is still more room to move up. On the daily chart, if we were to fall back, we still have the 9-day moving average and the 18-day moving average. I'll say the 18-day moving average is more of a better support. Reason why? The 18-day moving average coincides with previous resistance levels. So about the price of 261 and 42 cents. But if we were to move higher, which is around the all-time highs of last year, that price is around 269 and 28 cents. So that price movement from there to now, is only about 1.7% move up, and if we were to hit the 18-day moving average, it is only about 90 basis points. And let's check the next module. On here I'll compare the current trend with this trend. This trend dates back to July 12th to October 5th of 2017. I'll point out why these two charts are similar. So let's get started. So what we have here in the beginning of the trend, we have a slight dip in the beginning of the trend. I'll mark this as pink, and then we continue moving on higher with trend. And this is the wrong. I want to draw an upward trend, and then we have a dip touching the bottom Bollinger Band right here, and we have two instances where it touches the bottom Bollinger Band, and one instance where it meets or reverts back to the mean in the middle Bollinger Band. And then once more, it makes an uptrend right here and touching the upper Bollinger Band, finding some mean reversion, meeting back slightly in the middle Bollinger Band, and that is where we are right now. So I'll compare to the chart in the past. So what we have here in the beginning is the slight dip that I mentioned, and I had it as pink. We have an upward trend for several days, and that trend gave back for a couple of days, and we have the candles touching the bottom Bollinger Band. It touches, not necessarily touch the bottom Bollinger Band twice, but you see a slight price action going on in the second trend. So what I have here was blue, and then we have an upward trend afterwards, right after it made a second bottom, and we do have a mean reversion in the middle Bollinger Band, or a slight action, and I would say we are currently where this trend left off. And what we have here is 1, 2, 3, 4, 5, 6, 7 points. 1, 2, 3, 4, 5, 6, 7 points that are identical. So if the trend is identical or the points look similar, I would say the outcome will be somewhat the same as well. So let's check the forecast model. So on here I'll go day by day, where the trend will head to. So again, the chart that we took a look at dated back to July 12th to August 5th, 2017. So 1 day out, 2 days out, 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. And at that time, or in 1 week, the Dow Jones is about 80 basis points up. Not quite near the all-time highs, but we are slowly trending up as long as we don't have any big news that'll change the trajectory of the market. We should be slowly climbing up. So that is all. If you enjoy this content, feel free to like, subscribe, and thank you for watching.